Why HVF method? The tendency to trade continuation in real bull markets with tight risk management at a rare moment where you have low volatility with an asymmetric upside benefit or gain in terms of profit to the upside is one of the most powerful methods. In fact, it is, to me, the only and the primary method of trading, and I know no better way. Let's take equity, Hecla Mining. Now, you and I both know we've been very bullish gold for a while. Technicals gave us that. Miners have lagged, and now they're coming awake, and now they're going to play some catch up. You're probably aware of that. So with a good degree of fundamental positioning, is it possible for you to get in front of key major trends? Is there a method that is the forensic insider detective that will see things technically without the story yet that are going to happen before they even happen? Is it possible to get the news before the news? Let's go take a look. Okay, monthly Hecla Mining. Now, we've done many draws with this one before, waiting for that big turning. I had legacy draws before I even had my draw tool. I came back to it and we'd drawn in 2021 various formations expecting a long-term setup. All throughout this time, these equities were actually in the doldrums, not doing very much, whilst the likes of the Mag 7 were going to new highs. Here's the value of HVF method. We are married to no market. We show up for the good times. You should be a fair weather friend to all equities. That doesn't mean we aren't long for macro trends. It means we show up when they show us it's time to start partying. Let's have a look at this monthly setup. You'll see that I've now put, utilizing our draw tool, this particular draw on. Squeezy Japanese is the catchphrase. You'd be disappointed if I never said it. And there you go. And of course into here, whereas we've had a harder stop level around the 333. Oh, devil's number. Yep. And all the way through. So this has been squeezing. Also, other observations that we've made is that number nine, which is 333 as well. Oh dear. The mathematics, the gematria, I'm feeling challenged. Yes, you can see that 9 was a key level. I would have thought it would have been 10, but actually the key levels just run on 9 on a number of occasions in this descending triangle that actually saw Hecla Mining be an absolute spiller, and not such a great thriller. If you were holding the shares, key triggering event to the downside, spill. You could have had this equity in the year 2000 when gold was at $253. You could have had this equity for 51 cents. Remember, this is a log-scaled monthly, quarterly chart. Did I say monthly? 3 monthly, quarterly chart. So this is capturing what's going down. Now, you might also notice that there's a little bit of squeezy action in here. You see, you can get the right trends, but will you be in the right shares at the right times where you could use judicious little amounts of leverage, or maybe just invest at the appropriate occasion? That is not advice. That's just what I would be doing. And that is what we tend to do. And we are switching our focus and re-emphasizing our focus now on miners as they are starting to come to the party. And we originally said, go gold first. Hands up if gold actually has been the best runner in the beginning of all this for the last 3-4 years. Yes, it has, since the break in 2000. However, there is stirrings, definitely off lows, definitely in setups, and things that we've been watching for years are now starting to shift. We're showing up for the forthcoming party that has been brewing for quite some time. So that's the monthly, and that's a checkup, and we've just had a move. There were results today on Hecla. So let's take you down to a lower time frame. We've identified number 9 as a key level that I suspect will be failing, and you'll see that we are actually calling on the macro time frame. This is how good it's going to be, guys. And this is why it's going to be important to be in the right equities at the right time. Miners are becoming the right equity. We are calling for an $84.75. That's probably a technical run of 85. It was very rare. It stops on the line, by the way. A run of the $85 on a share that is $7.77 today, and actually was even cheaper yesterday that you didn't know, didn't think, weren't aware of. But I'll show you how you could have been, how HVF Method, the forensic detective, might have warned you of all of those things. So let's dig a little deeper. For that, we drop from the 3-monthly time frame and we go down to the weekly time frame. So on the weekly time frame, again, you can see how that range was tightening. That's still only the relative low 3. Remember the 2 impulses from the quarterly, lows and highs. We've just got the third ones here, the down move from there. You could note how this was finding the base. There's your 333. You won't forget that number in a hurry. What you might notice is that you are also getting a squeeze within a squeeze. Our drawing tool helps and identify that for you. And in fact, you can see 2 lows there, and you can see a dotted funnel a little earlier that would have given you a tighter stop at 451. If you were here, if you were watching, if you understood HVF Method, where we've done a smorgasbord of excellent quality recorded material for you to watch while you interact with us in a live community, doing exactly what I'm demonstrating here and now on the equity markets in miners. You would have been entered long there on the break there, and you would have gone into a little bit of a holding pattern. We'll be dropping into that a little bit lower time frame in a minute. We have moved from the 3-monthly to the weekly to zoom into the actionable bit that has been coming about more recently. And we're actually going to take you next to the daily. Again, there's that 9, the key round number, just run and rejected. This move is going to take you up and through 9 on its way, we suspect, through 85, which could end up with a 9 of a different variety, a whole 10 times more valuable than it is now. Okay, let's drop to the daily time frame and catch the same mining stock. So you actually had results. You had results. So let's discuss this. You came into results with the forensic detective of HVF Method saying, very good. In short, results were coming today. Expectations might have been high given gold, so the market should have already priced some of that in. However, it still shocked the market to the upside. That's called an opening gap, and it was quite sizable. You closed the day. Let's get you the actual number of the close so that we are being accurate in everything we say. You closed the day at $6.04. $6.04. You opened, wait for it, you opened at $6.96. You almost did the better part of $1 on the open, by the way, as a result of the results that were released today, which of course you can now see over here. Hecla Mining rises, and then we've done a screenshot of that quick abbreviation right there for you. We'll clean our face. Hecla Mining shares rise 19%. Would you have liked to make 19% just on an open with a low time frame fractal of HVF inside a primer, which is an HVF inside another larger one's funnel? That's what it's called. So we had a fractal that was winding up inside a primer, all inside a macro. So in short, you actually could have got into this equity. Bear this in mind, and this is how you multiply your way to great gains. You actually could have got in on the stop loss of the fractal on the daily time frame. You could have seen the primer on the weekly inside the funnel on the weekly time frame. That is all part of a far larger quarterly structure. This is called multiplying your way to wealth. Why multiplying, you say? Because you use the stop of the fractal on the basis it will never be run again. Oh, I didn't let you fully read the fundamentals. Let's just finish with that. The stock is on pace for its largest percent increase since May 17, 2021. Last time a gold high. Only this time, gold's going to keep on going in a while. Not just yet, but in a while. The mining company reported sales of 304, up from 245, against expectations of 259. So it did almost 50 million more on 250 million. That's pretty decent performance. It's 20% more. Hence why the stock is up almost 20%. You see that? It's kind of mathematical, isn't it? Okay, let's go back and just say, why multiply your way to wealth? Because this particular distance on the stop is incredibly tight. on that fractal. You knew the results were coming. We would have, on the basis of the upside HVF, said the news is going to be of upside bias in terms of performance, on balance of possibilities and even probabilities, we would say. In short, isn't it also interesting that trading right up to now, it's jumped to the target that is implied by the geometry of this fractal on the daily time frame. There's your fractal on the daily time frame. It said for the short time frame under review for which this fractal time frame is relevant to, we see a potential move to $7.72. You could, of course, be out as a result of that with a very tight stop. And what would your RRR be? It would be 3 fat ladies, 8.88. Boy, are we hitting those numbers today. Ooh, so many little lumps to squeezy. How many boobies is that? Anyway, let's not get too excited. Let's get back to technical analysis, shall we? There's that fractal. There it is right there. And that's on the funnel of this primer, which is on the weekly time frame. So that's your risk reward so far. But hold on, we have a macro setup that is taking us all the way to the monthly time frame. Not the monthly, the quarterly. I keep saying monthly. This is bigger than that. You don't even realize how big it is, Francis. You keep talking these small numbers. Get with it. It's much bigger than that. Okay, so let's see if I can get that monthly. It's taken my risk reward away. We're going up the time frames and it's taking it all away. Where did it go? I put a risk reward on there. Come on, guys, give it back. Okay, let's try again. Let's try again. We're going to have to go right down to the daily to get it right. Oh, there you are. You're so tiny, you almost disappeared. Let's try again. It's funny that. Let's try again. So there we were. There's the stop. And there would have been the entry. You would have had to take this, by the way, before the earnings. When you understand that a major earnings event is coming, don't expect fulfillment. If you had not got in the day before, focus on me, do not autofocus blurry. You would have seen that you would have not made the gap move. This is to be expected on earnings announcements, friends. This is exactly to be expected. So we're going to have to put that indicator back on and redraw it, and we're going to try and make it survive this time. What's the point I'm making about all of this? The point I'm making about all of this is that had you taken this, you already were good for a 888. However, that's really just the beginning. It's really just the beginning on the basis of what we've described. Multiple patterns in nestled within each other across time frames. So we take you to a far higher level, which we hope this time our risk reward will actually stay, all the way through to, wait for it, let's make sure we log scale, all the way through, you heard him, he said 85. 85. That would be the target there. Now, if you have a look at the risk reward ratio, you are at 565 RRR. That requires that we do not come back down. We do not come back down and run the stop, which is at $6.04. Now, I'm here saying to you, on balance of probabilities, you are more likely to see $85 than $6.04, which is just $1.70 away from the action. And the upside target from 777 is more than virtually $80 away, $78, $79 away. Now, most people would guess that I'm wrong about that. Imagine a demand-destroying event, something bad to happen. Who knows? Who knows? Now, if you chase in here at a target after a major gap, you're likely to have a bad fill. And that could mean the market moves against you for a while. You see, people say, oh, I don't have the money to invest in being in a community that does multiplying your way to wealth with multiple HVFs across time frames on the daily through the weekly to the quarterly time frame, like the example that this man is giving, which purely can't be the simply only one in a macro bull market while gold is going up with lagging miners all to catch up. I couldn't make the money. It's not worth the investment, they say. In this single one trade that you missed, you paid for your entire family to be in my program, even if you had made a smallish investment. Why? You just landed 3 fat ladies. 8.88. Now, if you don't have the ability or the capability to maybe have a potential loss of $1,000 in investing and trading, then this might not be for you, or 500, let's say. But you would already have done exceedingly well with that. $500 times $8.8, call it 9, you're at 4,500 in a simple trade that's going to continue on up. Instead, you're on the outside looking in, wondering how far does this pull back? Some will even squeal, the gaps always get closed. I'm afraid they're wrong. They don't always get closed, but they can get closed or they can get partway metered. I can't answer that. But before the results, had you consulted with me about this particular equity, I would have said buy it before the results. It's likely to break to the upside and gaps are indeed possible. In fact, we have a piece of theory that talks about the triggering event being a gap, and it's known as the gap for a candle. You would have done that right here. Announcements on earnings are the sole moment when major gaps are and very potentially possible in equities. It's not the only moment, but it is indeed possible. So, having landed an 8.8, in actual fact, you've just begun your journey to 565 times what you got. Now, maybe if you could only afford, say, $100 on a risk reward of a single trade on an HVF program, and you borrowed to the hilt to become part of our community to do it, and there was your $100. How much is that 565 RRR on $1 worth? Well, it's 565 times 100, so that would be $56,500. Only on target performance, by the way. Not going to happen tomorrow, next week, next month. But HVFs are known for happening disorderly quickly once they are set up, as you might have observed here. Since the triggering event, you've had 1, 2, 3, and target made. 4th candle on a daily time frame as a result of the earnings announcement. Yes, is that not interesting? It's interesting to me. It's certainly interesting to me. Should you chase in now? I am a non-advisory, and I would personally, on my own account, would not if I was not already in. I'd wait for a little bit of coming back. You had a secondary gap here after the move down. So, with all that said, keep this one in your list. But think right now of all the opportunities you're missing. And to be clear, you only need 1 or 2 in a year of these kind of scales, and the rest is patience and doing no harm and damage, sitting and waiting for the proliferation, people to proliferate, for gold to resume upside after a little bit of sideways, maybe a bit of down, and to be taken to a far higher standing in wealth. Our 3 goals: help build you wealth in reset times, help preserve and retain that wealth, which involves a lot more than we can get into in this call, and secure additional freedoms and optionality as a now wealthy person in multitude of different geographic zones, so that you cannot be taxed out of your wealth or any other attack vectors that your status friends are going to bring to you. Okay, if that was useful and you don't like cryptos, you like sound money only and precious metals, you only want to hear about stocks, this is how you would utilize 3 different time frames of HVF method to maximize you to an $85 run, which will probably go a little beyond that as well, with an incredibly tight risk that could see you overperform and move very, very strongly during a key continuation bull market for resource companies that have been lagged for absolute half a generation in terms of the crowding out of all the money into the tech status equities. Watch and enjoy as some of that money is being bled out and recycled into resources and commodity stocks. Watch and listen to how Trump brought resources and commodities to the forefront with his comments on Canada, Greenland, with the event of Zelensky securing Northern Platts, all the other controlled talking heads, all positioning for a resources bull. Go watch our previous YouTubes on why in hyperstagflation, the resource sector and commodities will be a big performer and will bring that inflation they so desire, which will ruin your cost of living and debase the debt that they've overcreated. However, if you've positioned correctly, you can actually come out of this in real terms significantly wealthier. That's the promise of HVF method, continuation trading with asymmetric rewards to tight stops in real big macro bull market environments across multiple time frames. Hope you enjoyed that video. We'll catch you again soon. Give us a like and a subscribe. Bye for now.
Tired of profit wipeouts and blown accounts from following trade signal groups and other YouTube channels? Looking for a better way to trade, reduce your stress, and minimize your risk? Become a skilled technical analyst and see the charts and markets in a new light using the successfully proven HVF method by Francis Hunt, while being surrounded and supported by a principled, structured, and experienced community. Enjoy a constructive learning environment while practically trading markets, supported by a bespoke platform run through browser and app, specifically designed to teach and engage you whilst learning and growing as the markets move. This is not a Telegram or Slack signal group. All trade ideas are based on a proprietary technical analysis process honed over decades, which is the HVF method, leading to trade ideas with fast-moving breakouts and tight stops, exact entries and exits, nuanced interim considerations, and ultimately, strong rewards. Submissions are graded and scored by Francis for potential high-quality setups, and we provide bespoke tools to help get the job done properly and with precision. Over time and with focused effort, you'll begin to look at charts and price action just like Francis. Community updates every day by Francis and our 3 webinars a week provide a 360-degree approach, which are presented by our experienced team of trade leaders to spot potential trades. We're a community of self-actualized individuals, spanning the globe and active 24/7, 365. The premium community provides a warm, supportive, and cooperative place for people willing to listen, participate, contribute, and to learn. We've changed thousands of traders' lives. Transform your approach to trading now. Transform your life. Book an introductory call with us on the link below.